All right. Well, I hope this laptop has enough space. But anyway, we had some technical issues there, but now we're good, I think. All right, guys. So I wanted to first say hi to Paul and welcome Paul, and kind of just let all the viewers know exactly how Paul and I actually met. We both actually happen to have our own Facebook groups in regards to cryptocurrency investing, and basically just going out there and trying to help as many people as we can and spread the message of this amazing opportunity that's out there. And before we finish the interview, I'll definitely let Paul talk a little bit more about his group. So if this is something you guys want to get involved in as well, I would highly recommend it. Prior to that, one of the reasons why I wanted to have this interview with Paul was I presume both Paul and I are always on our never-ending journey of finding new projects, new opportunities to possibly invest in. And it so happened that during some of my research, I found out about this one project that we're going to be talking about today, and I'll let Paul go into more details. But it so happened Paul already knew about this project and was already talking about this project through his Facebook group, which led me to believe that he obviously knows something a little bit more than what maybe the common man knows out there because he had access to this information a little ahead of time. So I thought this would be a great opportunity to kind of ask Paul about this project, share with all the viewers what it is and why it might be special. So, Paul, thank you again, man, so much for being here. And you know, if you can you just maybe give me a brief, background of your journey into the world of crypto and especially DeFi, and how you find yourself where you are today?
Yeah, you bet. Well, first of all, Mick, thanks for having me. Really appreciate the opportunity to speak about just crypto in general and all the things that I'm passionate about, which is obviously cryptocurrencies, the evolving world of decentralized finance, and then my emphasis has always been around the safety of navigating this space because it's ripe with obviously abuse because it's very unregulated and it's so new and it's a different language, so people get tripped up a lot, and so that's been my passion, was helping people navigate safely. But to answer your question, I'm pretty new to crypto, and I would say that just in general, as far as the people that
I
I
guess we
talk
all
to.
are, really, aren't we?
Yeah, well, exactly. I heard about Bitcoin in 2009, 2010, didn't do anything with it. Forgot about it for half a decade or so. It really wasn't until 2019 that I got involved in cryptocurrencies, and that was, I started buying Bitcoin like most people do. That's their first venture in. Started buying Bitcoin in 2019. It was going between $5,000 and $10,000. I remember it dipped in early 2020, as we all know, the COVID dip, and it dipped down to I think that $5,000 range, and that's when I bought my first whole Bitcoin. Because of that dip. So that was really where it began for me. Was dollar cost averaging into Bitcoin, and then in kind of mid 2019 is when I started, I guess. But I was introduced to a project called Hex in 2019 as well, late 2019 when it launched. A friend of mine that I had known for a very long time introduced it to me, and that was the first time that I started to understand what decentralized finance is, because that's when I started buying Ethereum, so that I could, navigate the Ethereum blockchain, and need that to obviously pay my gas fees and things like that. I think ETH was around $200 or $300 then, or something
Hmm.
like that. It was
Mm-hmm.
pretty neat, and
Nice.
transactions cost a lot less than they do now. We'll talk about that, but that's where I really started. Then I started buying Hex and started staking that and learning, what I believe true DeFi is.
Mm-hmm.
And we can talk a little bit about, what I think the term DeFi gets thrown around really loosely in this space. And I really want to differentiate what I believe is true decentralized finance, and what is sometimes maybe just thrown around rather loosely. But
Definitely,
then to
definitely.
kind of to fast forward it to today, then, um, with the Ethereum blockchain popularity came obviously very large amounts of congestion and high fees. And that's what led to the development of this new layer one blockchain that we're really on the eve of launching, called PulseChain, and how that came about. I know we'll kind of get into that and the history of PulseChain, which was announced really that was in development 2 years ago. This is a 2 years in development project, gone through a lot as Ethereum changed as well because it's a fork. But I've been following it really since summer of 2021. That's how long it's been in development.
What, this PulseChain thing? Okay.
Correct.
Now, just so we can back up just a little bit, how did you, just so we can kind of help the viewers and maybe how they can kind of find out about up and coming projects, how did you find out about Hex to begin with?
It was a friend of mine.
Okay.
A friend of mine that's been in crypto since 2014, 2015. He was a former Bitcoin maximalist, a Bitcoin maxi. He used to tour, did Bitcoin tours all across Canada, promoting it when it was really coming out. He was around when Ethereum launched. So a real OG in crypto that I've been friends with for a long time. He called me up in probably November of 2019. I remember specifically, he said, hey, there's this project called Hex that's going to be launching, and he had been following the development of Hex for 2 years, and it was close to launching, and that's when he introduced it to me. And so I've been involved with Hex since day one, which has been extremely profitable as well.
Okay. Now, I did just a little bit of research in Hex a little while ago. I believe it's some type of like digital equivalent of like a certificate of deposit or something. Is that what the premise is?
Yeah, that would be probably for somebody that is understands traditional finance, how that would translate into the crypto space. I would look at Hex as what the CD, certificate of deposit is basically you're monetizing time, right? You're taking a portion of your assets and locking those up for a period of time in exchange for earning an interest rate, hopefully competitive, or you wouldn't do it. And then, when that matures, you're getting your principal plus all of the interest, and you can, put it back into a CD or whatever. So what Hex did, I think, pretty revolutionary, was bring that, and CDs are a, multi-billion-dollar industry for banks, and bringing that to the blockchain. Hex was really the first one. You didn't hear a lot about staking anything until I think Hex really made that, really a bedrock of crypto investing now. This was before Uniswap. This was before a lot of decentralized exchanges started coming out with this stuff. It used to all just be centralized exchanges, right? At the beginning. So making staking popular. Now you can pretty much stake almost any token that you get a hold of to earn, either more of that same token or another one. And Hex, I believe, was, if not the first, one of the first to do that in 2019.
Okay, nice. Now, so basically you learned of Hex, and then because of your involvement with Hex, is that how you kind of learned about PulseChain? Okay.
Yeah,
what kind of relationship do the two of them have?
Well, it's the same founder.
Okay.
So the founder of Hex, his name is Richard Hart. He developed Hex, and the reason, really, the reason that PulseChain exists today, it's in testnet version 4 right now, but the reason that it even exists is because of what happened to Ethereum. So Richard Hart, when he launched Hex, and it did very well, did 10,000x in its first like 600 and something days, did very well. He said that because of especially in 2021, we were at the kind of the height of that bull run, and the fees on Ethereum started becoming quite shocking, and it limited a lot of people on what they wanted to do. It limited a lot of projects. Sending an ERC20, between two people was over $100 at one point. To do a swap on Uniswap on Ethereum was $300. At some of the heights. I mean, just ridiculous fees. That leaves a lot of people out. They're not going to be able to navigate and do what they need to do with fees like that. So Richard Hart said from the beginning, he launched Hex on Ethereum, because, in 2019, because, it was the best for the project at the time. But he had said all along, look, Ethereum, these are his words, look, Ethereum, if you start to suck, I'm going to fork you. Okay.
Mm-hmm.
Because what we started seeing in 2021, because of the high Ethereum fees, when somebody went to, and it had to do with the S load function update that Ethereum did, I believe in 2020 or 2021, the end staking costs for Hex were very, very high. Okay.
Mm-hmm.
And so that limited a lot of people. So if you only had, $100 or $200 worth of Hex in your stake that you were ending, and you went to end stake it, and it cost $100 to $200 to end stake it.
Yes.
That,
Yeah.
that defeats the purpose. So when those fees got up there, he said, all right, Ethereum, I warned you. In jest, right? He
Mm-hmm.
said, look, we're going to fork Ethereum now.
Mm-hmm.
And so PulseChain was born, the concept of it in the summer of 2021. That's when the sacrifice phase, nobody sacrificed for tokens before. That was the first one to offer sort of a sacrifice phase, which is equivalent to what I would say like an ICO of 2017, where you could.
Yeah, I was going to say, can you explain that a little bit more so that people can understand what that means?
Sure. So it's important to understand when the sacrifice phase now for a token comes out, and you guys might see that more and more because it's become very common now. Richard is very, very keen on understanding crypto regulation and crypto laws and understanding what a security is. So it's important to understand how we designed Hex. Hex is what I believe is truly a decentralized piece of DeFi, decentralized finance, because there are no admin keys. Okay, the contract is immutable.
Mm-hmm.
All right. Once that was deployed on Ethereum, the Hex smart contract, it could never be changed. Not even the founder can change it. Nothing can be changed. It is what it is. That's why it took years to develop it, because there's so much testing that goes in it. Because once you launch, that's it. If there's a bug, there's an exploit. First of all, you're going to lose a lot of your investors' confidence, obviously. But their only recourse is maybe to try and roll back to the block before the exploit or the bug happened. Then you're trying to re-raise liquidity. You're looking to then airdrop on our new contract address. Obviously, you lose a lot of investor hope. We see that a lot in these rug pulls, or exploits, and it's usually inflation bugs, things like that. So Richard took 2 years to develop Hex, 2017 to 2019, launched it. It's now over 1,000 days, 12 or 1,300 days now. 100% flawless uptime, never had a bug, never had an exploit. Okay, truly immutable. Richard can't even go in and change anything. All right, It is. Once it's launched, it's launched. PulseChain is going to be the same way. That's why it's taken 2 years to develop. It's going to be 100% decentralized. All right, it's all going to be based on validators, right?
Mm-hmm.
So it's important to talk about that to understand and the reason he does that is because of the Howie Test, and here in the U.S. the securities regulations. If you understand what the SEC uses to determine if something is a security or not, is what's called the Howie Test. And the first, really, there's 4 bullet points. The first one is really, are you investing in a common pool with the expectation of profit from the work of others? And if the answer is yes, then you have a security. Okay, and then it has to be registered, and the company or whatever that's offering the security has to abide by those rules and that sort of thing. Hex fails the Howie Test, okay, which is a good thing in crypto, and that is, no, it's decentralized. Something has to pass the Howie Test means that it needs to be a regulated security.
Mm-hmm.
Well, Hex is truly decentralized. There's no company, there's no organization. Okay, what would register? There is nothing to do. It is a decentralized, it's just a piece of code sitting on the Ethereum blockchain. You choose to interact with it or not. Nobody holds there is no one single choke point. There's no admin keys. Those were burned. It's totally immutable. There's no counterparty risk. It is what it is. You can choose to use it or not. It's not a security. PulseChain is going to be the same way. So with that in mind, why Richard rolled out the PulseChain sacrifice phase was, he said, hey, blockchain is free speech. Okay, decentralized. Ethereum, decentralized, right? I mean, there's no single point of failure, right? There's over 500,000 Ethereum validators now. You would have to shut down 500,000 servers essentially to try and destroy Ethereum. Okay, that's the whole point of decentralization, right?
Yep.
So he says, well, blockchain is free speech, and maybe you guys, would like to sacrifice some of your crypto in the name of free speech. Okay, when you sacrifice something, you have no expectations, right? You're just basically sacrificing it. You don't expect anything back. You're just sacrificing it. So he uses these terms to maintain the lack of any of his projects going to be securities. Okay. So no expectations. He goes, hey, if you want to sacrifice in the name of free speech. And he also did it for medical research too. He's big on longevity, medical research. And so he also picked out an organization that he used to volunteer for called the SENS Foundation. And they're looking at longevity research. And so he also said, if you donate to this foundation, then you'll also be receiving sacrifice points. And that was the point. Anything that you either sacrificed for freedom of speech, this is during 2021, right? There was a lot of censorship going on. There was a lot of bad stuff going on in the world, right? With lockdowns and people limited travel. And so, all of this sacrifice stuff was for freedom of speech, freedom of movement, freedom of assembly, all of these, God-given rights that we have. Or you could donate to this foundation, and whatever you sacrificed, you got sacrifice points. And then you said, perhaps, that way you're identifying as a group of people with a common enterprise, right? With a common belief. And he goes, it just so happens, kind of wink, wink, nudge, nudge, that other groups might see this sacrifice set, this group of people that believe in freedom, that believe in longevity and research and that sort of stuff. They might airdrop you some free stuff just because you're a group that they share those same ideals with. Okay, that's all. That's basically all it was. Okay.
This was Hex when it started, you mean?
No, this is PulseChain.
PulseChain, okay.
This is PulseChain. So the sacrifice phase for PulseChain opened up. It was like 19 days, and it had some multipliers. Obviously, the sooner you did it, you got a better, more sacrifice points, and it kind of petered off. But that was the sacrifice phase. That was in 2021, and I don't remember the exact numbers, but it was I think it was about $600 million or something like that was sacrificed. That was the USD value. Over 27 million of it went to this SENS Foundation, right? And so anybody that did that also got a tax deduction because that's a 501c3. So there's $27 million that was raised for medical research for longevity, and a total of over $600 million was, I believe these are numbers, don't quote me on them, sacrificed for PulseChain. And so that resulted in, obviously, when PulseChain does launch, goes live, then all of the people that sacrificed are obviously going to be airdropped. And this is the key, going to be airdropped these PulseChain tokens on the new layer 1 blockchain. It's a fork of Ethereum. We'll talk specifically about what PulseChain is and how it differentiates from Ethereum. They're going to receive those, on a one-to-one basis based on the, I think it was $1 US value was equal to 10,000 sacrifice points. Okay, and you got one PulseChain for every sacrifice point that you're awarded. So that's what came up in 2021. So anybody that was in Hex or knew of Hex or followed Richard Hart knew about PulseChain when he announced it in 2021, the summer of 2021. So it's been almost 2 years since he announced that. So I know it's kind of a long answer, but I think a lot of that stuff is important to understand why it was worked the way it did, so that it is never considered a security. Okay, Richard's always kind of thinking years down the road. He saw this regulation coming long before it really took a foothold like it has just in late 2022 and now in 2023. We see what the SEC is doing with Binance and Coinbase, and especially here in the U.S.
Yeah, yeah.
To understand how all that is, is going to be rolling out.
Okay, interesting. Now, I guess I know you probably talked about it a little bit here, but what attracted you to this PulseChain project? And can you give maybe an overview that is a little easier for people to understand, and maybe its goals and why you were attracted to it?
Sure, sure. Well, having been, involved and an investor in Hex since 2019, and at this point, for year and a half, 2 years when PulseChain was announced, we had 2 years of flawless uptime. A lot of crypto, especially the height of the bull run, there was so much, meme coins and NFTs and stuff was selling for millions of dollars, and we had Shiba Inu and all this stuff. But there was also, for every Shiba Inu, there's 1,000 other projects with rug pulls,
Mm-hmm.
inflation bug. I mean, Bitcoin's had inflation bugs. There's two of them. They had to roll back the chain once, and Ethereum was having problems. It was Ethereum Classic then, but they call it Ethereum Classic now. They had to fork that, Ethereum. So all of this stuff was going on. And so knowing that, Hex had already had almost 2 years of flawless uptime, I knew that the next project that Richard put his mind to was going to be pretty special as well. There's a lot of people that, found out about Hex, 2 years later, and they wish that they had an opportunity to get in early on one of his projects. So when he said, "Hey, I'm going to be forking Ethereum, and we're going to be doing a new layer one blockchain here that's going to be faster, cheaper. It's going to basically be Ethereum plus benefits or plus additional improvements."
Mm-hmm.
That's why people got pretty excited. So naturally, that's why a lot of us that were following Richard Hart got excited, because here was a ground floor opportunity. I mean, you look at what layer ones have done as far as price performance. If you look at layer ones that have launched, besides Ethereum, but the stuff that's launched since then, layer ones, they do an average of 100 or 200x within their first year or two.
Hmm.
That's what layer ones do, and these layer ones launch empty. They don't launch with an entire system state copy like PulseChain is going to do. So we're going to want to talk about that, because it's being advertised as the largest airdrop in crypto history coming up when PulseChain goes to mainnet. Okay, so that's going to be huge. So based on all of those things, it's became very attractive. That's why I think so much was sacrificed, so much was donated to medical research, is people want to get in on a ground floor opportunity of a layer one blockchain. Okay,
Okay.
it's basically going to be ETH 2.0, but even faster and cheaper.
Okay. If you can, I mean, can you maybe talk about how PulseChain, I guess, differs from other existing DeFi projects that you have run across?
Yeah. Well, PulseChain is going to be, to really compare the two is important, because if you know how the Ethereum blockchain works now, okay, it used to be proof of work, now it's proof of stake. If you understand how Ethereum works now, PulseChain is basically the same code. Okay, it's a fork of Ethereum. So anybody that's interacted on the Ethereum network, or use smart contracts on the Ethereum network, PulseChain is going to be very much the same. If you're using MetaMask,
So the same type of security, same type of reliability that Ethereum has been showing the
same
world.
code. Yep,
Okay.
same code with some improvements, and that is obviously it's going to have a shorter block time. It's going to be 10-second blocks. It's going to be higher throughput. Some of the lifting up the hood and looking at it, it's Ethereum basically on steroids. Okay, that's the idea. Here's the goals, I would say, of PulseChain. Okay, number one, you go back to what I was saying about why it even came into existence, was because of Ethereum's congestion. People said, "Hey, go into proof of stake. That's going to take care of the gas fees," or some of these other EIP 1559. I think it was the improvements that they made in 2021, 2022 didn't do anything for the gas fees. So number one, it's going to be taking a lot of the load. Once it gets up and running, going to be taking a lot of the load off of Ethereum. Okay, there's going to be a lot less congestion. I mean, think about what those gas fees were in 2021 for Ethereum. What's the next bull run going to be like? okay, 2024, 2025. What do you think the gas fees are going to be like? We could be looking at hundreds of dollars just to send an ERC20 to another wallet. We could be looking at $300, $400, $500 to make a swap on a DEX on Ethereum. Okay, that's ridiculous. PulseChain is going to be able to do the same exact thing.
You there?
Congestion off of Ethereum. So that's really good. I think the timing of the launch is going to be great. You know, we're here in the bear market, or maybe the end of a bear market, or we're maybe transitioning from bear to bull right now. Great time for PulseChain to launch. You know, literally could be the next couple of days, weeks. You know, I don't think it'll be much more than a month, but it's going to be sharing that Ethereum load and reducing.
What makes you believe that it's going to be pretty close around the corner? I guess I've seen that they did a testnet 4 or something, or testnet 5. I don't know. I guess another one just kind of went through or something. Is it basically, have you noticed from the previous how long it takes for these projects to kind of go to mainnet? They go through what, iterations of 1, 2, 3 testnets? Is that why you're thinking, all right, it's close?
Yeah. So Ethereum, you know, when in 2021, when PulseChain was birthed, you know, as far as conceptually, this was long before Ethereum was proof of stake. You know, it was proof of work then. You know, it was miners. So when Richard said, "Hey, we're going to launch, I'm going to fork Ethereum," he planned on it being proof of stake right away. Okay, so he started, you know, developing the code around proof of stake while Ethereum was still proof of work. Then Ethereum, you know, during development, then Ethereum came out with proof of stake. What was that, last fall, ETH 2.0, and they transitioned over. So when that was happening, basically, from what I understand, and I'm not a developer, I'm not on the development team of PulseChain, but just you know, as an observer, you know, they kind of slowed everything down in PulseChain development because they wanted to see how Ethereum's proof of stake code was going to work, right? I mean, they were going to basically be testing PulseChain before PulseChain was ready to launch anyway, with the change, right, from proof of work to proof of stake. So, you know, glad for all of us that, you know, the proof of stake rollout was great. Ethereum has been working just fine. There hasn't been inflation problems, validator problems. There hasn't been any bugs. There hasn't been any exploits. So what they did is they then used that Ethereum code, and that's what they forked. So really, PulseChain has been truly in development, I would say, since last fall, since ETH 2.0.
Okay.
So that was what went. That was V2, V1 and V2 were prior to ETH going from proof of work to proof of stake. Okay. Once Ethereum went to proof of stake, then V3 was launched. Okay. And so V3 was basically from, you know, last fall up until, V3 then was in, I think it was February. V3 launched in February. So that was when, hey, for public testing, you know, obviously the internal testing goes on a long time. V3 public testing started in February. And so from then until just about 2 weeks ago, after the Shanghai update, okay, and that's what everybody was waiting for, is because what the Ethereum Shanghai update is, it allowed all of those people that for the last year or so had put in 32 ETH and locked it up so they could become an ETH validator. The Shanghai update allowed them for the first time to be able to withdraw that ETH. Okay, it was, when they locked that up, it was going to be indefinitely until the Shanghai update. So Ethereum came out with the Shanghai update a couple of weeks ago that allowed all of their validators to be able to withdraw the Ethereum if they wanted to. So we were waiting.
Theoretically, when that happens, sometimes you see price drops because people are able to pull their, or get access to their ETH again and maybe potentially sell.
Yeah. Did we see that though? Did we see
it? We didn't see it actually. I don't think so. No.
No, because it pays to be a validator. I mean, you're earning a lot of Ethereum fees, right? I mean, there's quite an APR for that to do that. There's over 500,000 validators now. So and there's 32 ETH locked up for each validator. Now those can be withdrawn at any time now, but that's what we were waiting for ETH to come out with. so that that code could then be implemented into PulseChain. So now a PulseChain validator is going to be able to obviously deposit and withdraw their pulse just like Ethereum. Okay, so that's what V4 is. So V4 then is the Shanghai update for PulseChain.
Okay, so prior to that Shanghai update, because PulseChain was basically just copying the same code as ETH, it would have also had to require some type of 32 ETH lockup or equivalent.
Yeah. So now this gets into the difference then. So PulseChain is going to have a million. It's a million times the supply of Ethereum. Okay. So it takes 32 million Pulse to become a validator.
Okay.
That's what it's going to be. So, and the reason that Richard is doing it this way is that he wants to dilute the ETH whales. Okay. So here's what's going to happen. This goes into the system state copy. So for all of you listeners out there, all your viewers, whatever you own on the Ethereum blockchain, if it's ERC20, all your NFTs, everything that you own is you're also going to have a full copy on PulseChain when Mainnet launches. Okay. So you've got 50 million Shiba Inu. You're going to also have 50 million Shiba Inu on PulseChain. You've got a couple thousand Chainlink tokens, okay, on Ethereum. You're going to have the same amount on PulseChain. For everybody out there that owns Hex, right? Hex is on Ethereum. You own a million Hex, whether it's staked or not, or you have some staked and some is liquid. All of that's going to be copied over to PulseChain. And you're now going to have the same amount on both chains, okay? So that goes for your Ethereum as well. This gets back to about diluting the ETH whales, all right? So let's say you have 5 Ethereum in your, this is if you have self-custody wallet, okay? I want to make that differentiation because if you have ETH or you have any ERC20s, but they're sitting on like Coinbase or Binance or they're in a non-custodial wallet, you're not going to get your copy. Okay. You know who's going to get the copy? Coinbase, Binance, whoever is the custodian of that wallet, they're going to get the copy. So I recommend, and I already recommend this to everybody anyway, don't store your crypto on centralized exchanges. You need to have them in a self-custody wallet. That's also going to allow you to get the copy on PulseChain, okay? Because your ETH address is going to be the same on PulseChain. It's going to be the same address. It's a fork of it. It's going to be the same exact thing. It's going to be the same exact thing. So let's say you have 5 Ethereum sitting in your MetaMask on Ethereum. Well, guess what? You're going to get 5 Pulse. It's going to be 1-to-1 on PulseChain, okay? But it's not going to have the same value, right? I mean, 1 Ethereum is what, $1,800 right now? And we don't know what the PulseChain price is going to be. It's going to be up to the market because everything that's going to be airdropped to everybody, all of their copies, is going to have 0 value, okay? And that's when you want to acquire an asset, right? Because that way you don't have any sort of potential tax implications. And the law says if you acquire something, you got to pay tax on it. But if you acquired it at 0, you're only going to have it only becomes a reportable event when you then sell it or convert it to something else. So you acquire something at 0, that's not a reportable event, right? Now that thing potentially, hopefully going to grow in value over, the months and years and that sort of thing. And you're not going to have any sort of tax implications until you sell or till you convert it to something else. All right. So that's powerful from a tax perspective as well.
Quick question, Paul. So the hope is, I guess, let's say I have 5 ETH on ETH right now, and then once PulseChain comes out, you're saying I would get 5 Pulse?
5 Pulse tokens, just like one Ethereum, it's going to be 1. So here's why he's doing it that way. Okay. He didn't want, years down the road, let's say PulseChain does its 10x, 100x, or whatever, that we would anticipate that it will do, over its first year or two, just like all layer ones usually do. So let's say you've got an ETH whale, an ETH Genesis wallet there, sitting there with 10,000 ETH in it, right? Well, whoever controls that wallet a couple years down the road figures out, oh man, I've got 10,000 Pulse, right? I'm just going to dump that, right? Because I'm an ETH guy.
Yeah.
Well, that would severely hurt the PulseChain price, a couple years down the road with all of that value in there. So he didn't want somebody that's not being active with their crypto, right? Like an ETH whale, to be able to just dump all of that Pulse tokens that they would get for free. So he just said, we're going to inflate the supply of PulseChain by 1 million. So that way, that 10,000 ETH holder is only getting 10,000 Pulse tokens, okay? And not getting what would be like an equivalent value, at the time. So that is basically what to be aware of when this entire system state copy happens. And so the strategy going into this is, if you're holding ETH, I would recommend you transition that over to an ERC20 that potentially is going to have a lot more value over on PulseChain. You can always go back to ETH after the fork. Okay. So I would recommend for folks, if you're holding Ethereum, to take some of it, or whatever you're comfortable with, and convert that over to a token that's going to likely have value on PulseChain pretty quickly, so that you get your copy in that ERC20. Okay.
Could you can you give an example of what type of token you're thinking would maybe...
I can tell you what I'm doing. Obviously not financial advice, but
you know what? We should have said that at the beginning, all the legal mumbo jumbo. None of this stuff is financial advice, guys. This is just stuff that Paul's doing and he's sharing with us.
That's right.
And, we have to do our own research.
That's right. That's right. Do your own research. I can just tell you personally what I'm doing. I've been moving all of my assets on the Ethereum side into Hex, because I want that Hex copy on PulseChain. So that's what I've been doing. So I wouldn't hold any stable coins, because it's, it may be a while before the stable coins have that value over on PulseChain. You don't know when that's going to be. Take example, ETH POW, right? With the move from ETH to proof of stake, there was also the fork there that's still ETH proof of work, ETH POW. And so all the stable coins that people got copied over there, they're not worth anything, okay? Because the USDC, USDT, they don't recognize that on that chain, okay? So potentially it could be a while like PulseChain before, let's say you're holding 1,000 USDC or USDT as an ERC20, you're going to get 1,000 USDC or 1,000 USDT on PulseChain, but it's probably not going to have that value, at least not for a while, than it does on Ethereum. So it's a good idea to take stable coins in Ethereum and convert them into ERC20s that are going to be that copied over as an ERC20, like Hex or Link or Shiba Inu or something like that, because it's likely that when the bridges open up, that value is going to be moved over to PulseChain. Those are going to actually have some value. And then after the fork, you can go back and take your Shiba Inu or Chainlink or Hex or whatever and move that back into stables or Ethereum or whatever on the Ethereum side. So you're just kind of developing a strategy for this copy and then going back to what you had before if you want to. That might be a way to do it. I just recommend anybody that's excited about PulseChain is to not hold Ethereum or stable coins for that, because anything that you have in that is going to be copied over, but it's likely not going to have much value for a while.
Okay. Another question that I wanted to at least address, for a lot of our viewers, as you and I know, DeFi is obviously a pretty new technology. And there's a lot of people who still fear getting into this technology. Any chance that Richard Hart or this PulseChain project, is he addressing anything like that in regards to making it easier for people to kind of not fear it as much?
Yeah, I think around the DeFi discussion, it's important that we define what we mean by the term DeFi, right? So I believe that what I term it in my group and with friends and family when I'm talking about crypto, I talk about what is truly DeFi, what is truly decentralized finance, and the characteristics that I would say for a a project or even a crypto product that I would call as DeFi, it has to have a couple of characteristics. In my opinion, it has to be immutable code. Okay.
Yeah.
You can't have a founder or a developer that has an admin key that they could use in a nefarious way, and maybe not even in a nefarious way, but maybe accidentally do something, right? That could potentially allow for a bug in the code that could allow for an exploit to take place, or just a simple fact that and where what's a rug pull? Obviously, if somebody has control of liquidity, right, they can just pull the liquidity out of a project. That's how we see the chart go straight down.
Yeah.
But that doesn't necessarily a founder or a dev problem. If you're on a decentralized exchange, you should have a lot of people that are providing liquidity. So even if one person pulls liquidity, it's not going to affect the whole project as a whole. So what we typically see, from a rug pull or pulling liquidity, it's not that a founder or a developer was able to, and some of them are obviously, but by and large, what we see is an inflation bug. Okay, a developer or a founder that injects code after launch, after people have been investing, after liquidity has been added, and we see the chart going up. When we see that, when we see that happen, it's usually because of an inflation bug, and that not an inflation bug, but even on purpose. Somebody has the ability to change code and then mint themselves, like 1 billion tokens of that project, and then market sell those. And that's what drains all the liquidity. That's what usually happens when we say a rug pull. So immutable code is important, so that even the founder or one of the developers doesn't have the ability to change the code in any way. It's like changing the goalposts, right?
Yeah.
Or invalidating your tokens. Can you imagine going down to the bank? You want to move to a new bank, you walk in there, and it says there on the sign, please be advised, we have the ability to change your account balance at any time without notice. Would you put your money there? Absolutely not. Well, then why are we putting so much faith in some of these projects that have admin keys? Okay. Now, most of the time, a lot of the time, the founders, the developers, they're good people. They don't have intentions of hurting anybody, right? They just saw a need in the space. They want to develop a utility token or something that is going to foster the growth of cryptocurrency. But unfortunately, there's also those that are just doing it to make a quick $1 million, and they do it by introducing an inflation bug in the code after the liquidity has been added and everybody's poured their money in, right? They just wait till it hits a couple $1 million of liquidity, and they just inflate a couple billion tokens into their wallet and they market sell. Okay. So immutable code is very, very important when it comes to DeFi.
With that said, Paul, I know you said that in regards to this PulseChain, this Richard Hart guy has said there's no admin keys. He's saying this, or is this something that we can all verify? Is this verified through audits? Is that how it usually happens?
They verified through audits, but anybody can go into the GitLab and look at all of the code. It's the same as Ethereum's, right? It's basically going to be, it's really the simplest way to say it. Ethereum is done very well, right?
Now, I presume Ethereum doesn't have admin keys as well. Is that the deal?
Yeah, correct. I mean, it's a decentralized blockchain. It's a decentralized blockchain. That's why it's done so well, right?
Yeah.
I mean, look at Solana and think of another layer one. Okay. In my opinion, I stay away from Solana. How many times have they had problems with it? How many times has it been down? They've had to roll things back or whatever. They introduce new code to it, right? They're always introducing new code to try and improve it, make it faster, whatever. And then, unfortunately, they find a lot of bugs in the code. They've had to shut it down for a while, right? Well, if anybody is able to shut something down for a while, that's an admin key, okay?
Yeah.
That's
okay. Good point.
Key. You got to watch out for that, right? Now, I'm not saying Solana developers or people working for that company or organization are nefarious. I'm not saying they're doing this on purpose, but I'm saying that's a red flag for me personally. Okay, because what if you get a rogue developer? I mean, human nature is human nature. DeFi, in my opinion, should be immutable code. Okay. Now, a lot of founders, a lot of developers, they don't like to deal with that because they want the ability to make changes. They want the ability, if there is a bug, that they can fix it. They can interject new code to fix a bug. Okay. So there's that sort of narrative as well. So a lot of people will say, hey, I don't like that. You know, what if there's a problem? Well, I would say then you just got to sit back and wait and see if any bugs happen.
Right? Yeah. Any other examples off the top of your head? If you don't know any, that's not a big deal. Any other layer ones or anything like that that you know of that also have no admin keys and stuff like that that are also good?
If it's decentralized, then I'd say that is the key. And I'm saying that there's multiple people that are providing, the consensus, right? Mm-hmm. So that's basically what proof of stake is. Right now, PulseChain testnet v4 has, I think, almost 6,000 validators already on testnet. And that's expected to obviously grow very high. I mean, Ethereum has over 500,000. So, over the next couple of years, that's going to probably pick up. And what that means is that you would have to, again, like Ethereum, you'd have to go shut down thousands and thousands of servers in individual people's homes and their businesses that are running this stuff to be able to crash the network. So yeah, it's going to be the same, essentially the same code. But PulseChain is going to be deflationary. Okay. In some respects. And that's because of a percentage of every transaction fees are burned.
Nice.
Okay. That's really nice. Okay.
Yeah.
Now, Ethereum is inflationary. There's so much Ethereum that can be produced every year. So PulseChain is going to have that because obviously the fees are going to be earned by validators, but it's net deflationary in the fact that it burns a percentage of every transaction. Okay. Which is really.
Paul, if you could, just for our viewers, when it comes to tokenomics and stuff like this, a lot of people don't necessarily understand. If you could kind of just summarize why it's actually beneficial for people who get involved in certain tokens if that asset is deflationary. What does that really mean for them?
Sure. And I wouldn't say that for a project to be successful, it has to be deflationary. Okay. I'd say that it's definitely a benefit. Okay. So inflationary versus deflationary. Inflationary is basically the ability to print new tokens out of thin air. Okay. The best
like example, the US dollar?
Yeah, I was just going to say the best example of an inflationary currency would be the US dollar. Okay. And when we see all the problems with that, when anybody has the ability to just make more and it's not backed up by anything, it's not, I mean, once those, how many $1 trillion have been printed in the US in the last like 2 or 3 years? I mean, it's like 80% of the current circulating supply was just printed like or something.
I know, crazy, man.
It's crazy. What's the U.S. government's ability to pull any of that back?
Mm-hmm.
How do they get rid of all of that in that circulation, right? I mean, think how valuable a U.S. dollar would actually be if the U.S. government was able to
pull out the liquidity and pull out all the,
Yeah, I mean, literally, we say in crypto we call it burning. A burning of a token means it's erased from existence. It's erased from circulating supply. Will never see the light of day again. Think how powerful and how valuable a U.S. dollar would be if the U.S. government was able to actually burn our paper money, and make it go bye-bye so that there was a decreased amount of it. It would just make it more valuable, just supply and demand.
Yep.
So same concept in cryptocurrencies. It's, I like to look at, is a project, is it going to be inflating into oblivion like the US dollar has? And therefore, each token is going to be worth less and less and less as the supply grows? Or is it going to be somewhat maintaining? Or is it potentially going to be deflationary? Obviously the best would be deflationary. And that's what PulseChain is, because it's going to launch with its initial supply, right? And that is going to be based on all the sacrifice points that everybody gets. But what the validators are doing is just, instead of proof of mining, right, or proof of work, where the miners can just print money out of, or print tokens, print Ethereum, print Bitcoin, You know, now Bitcoin's a little bit different because it does have a cap, right? Eventually it's going to hit 21 million, and that's going to be it. And it's going to be sometime in the
And I
future.
guess it's deflationary in the way because of the 4-year halving schedule that they do, you know.
Yep.
So it is
Yep.
good that way.
Ethereum is inflationary. It is able to, but see, has that hurt the price? I mean, Ethereum is going to probably do, you know, what, at least $5,000 next bull run, you know, per token. It was up to the all-time high is 4,400. We're heading into another bull run. It's probably going to hit a lot higher this next time. So Ethereum is inflationary. There's so much that can be created every year. So now it's become deflationary, though, right? You know, when it was proof of mining, proof of work, you know, it had so much that could be done every year. Now Ethereum is going to be, in fact, deflationary, just like PulseChain. That's because the supply is the supply now. So now validators are, instead of miners doing operating the consensus network and approving transactions, now it's the validators doing it. So there's no new Ethereum being created anymore, and there's not going to be any new Pulse being created anymore, right? In fact, both of them, Ethereum's going to start doing this too, I believe. They're going to start burning a portion of those fees every transaction, right?
Oh,
And that's
okay.
that's going to be powerful.
Yeah.
PulseChain will be doing the same thing. So it's going to launch with an initial supply, and no new Pulse can be created because the validators, just like the Ethereum validators, PulseChain validators, they're going to get their APY from the blockchain fees every transaction, right? That's where the fees are coming from. And then a portion of those, I don't even receive 100% of the fees. A portion of those are going to be burned forever, gone from supply, circulating supply, never see the light of day again. So, and then we get into DEXs because along with PulseChain, there's going to be PulseX, which is going to be the premier DEX on PulseChain. That's going to be PulseX, pulsex.com, PulseChain.com.
So this leads into kind of the question that I had, I think, in regards to incentivizing liquidity providers.
Yeah.
Yeah.
Yep.
Okay. So can you explain that a little bit?
Yep. So for those of you that have been doing any liquidity providing, any yield farming, or if you've thought about getting into that, Nick, I know you've been covering that a lot lately. So I definitely recommend folks getting onto your YouTube channel, following you on Facebook. They probably already are if they're not seeing this, but tell your friends and family, this is a great way to earn some passive income by putting your digital assets to work for you, you know, in a very safe and patient, conservative way, which is what I'm all about as well. But just like whether you're using Uniswap, NightSwap, ApeSwap, you know, all of these different decentralized exchanges, DEXs on these blockchains. PulseX is going to be the premier DEX on PulseChain. It's going to be where most of the liquidity is. It's going to be where all the liquidity is initially until other people decide to launch a DEX on PulseChain, just like there's multiple on Ethereum and multiple on these other blockchains. But and it's going to be exactly like you would on Uniswap because PulseX is a fork of Uniswap. All right, so it's going to operate just like Uniswap does on Ethereum. You can go in there and, you know, just like you teach and just like I do, you take two tokens that you like. Okay, don't pick one that you like and one that you don't like because of impermanent loss. You could end up with a lot more of the one you don't like. So pick two tokens that you like. Okay, mash them together, right? And go onto PulseX when it launches and provide liquidity, right?
Now,
or allow people to buy and sell into.
Theoretically, PulseX DEX will kind of coincide pretty quickly with PulseChain. Have they been already developing it?
Yep, it's in testnet v4. It's all going to be one package.
Ah, nice. Okay.
Yep. So everything is going to be when all the airdrops happen at mainnet launch. Okay, there is no snapshot. It's a fork. So whatever you own on Ethereum at the time of the fork is going to be copied over, and you're going to be airdropped on PulseChain. So you're going to go into, just like those of you that are using MetaMask or, you know, another non-custodial wallet, when you're switching between blockchains, maybe you're switching from Ethereum to Binance or to Polygon or to Avalanche or whatever, and you're switching between those. You'll just be able to add the same settings to get to PulseChain. So it'll be one of your drop downs in MetaMask. And so you've got 1,000 link tokens. When you go over to your MetaMask and you add PulseChain, you drop it down, you're going to see 1,000 link tokens on PulseChain as well. But everything's going to be airdropped and it's all going to have a value of 0 because there's not going to be any liquidity. Okay,
Mm-hmm.
there's no liquidity set up, so everything is going to have a value of 0 when you receive it. That's good for taxes.
Mm-hmm.
Okay, that's really good. 48 hours after mainnet launch, the bridge from Ethereum to PulseChain will open up. That's called PulseRamp, pulseramp.com. That's where you're going to go to be able to then bridge any value you have on Ethereum. You can bridge that over to PulseChain. So that's going to allow those pioneers of liquidity providing on PulseX, on the PulseChain blockchain, are going to then move value over and be able to start providing liquidity for trading pairs on PulseX. When that happens, then we have a chart. Now we have a chart for Link, Shiba Inu, Hex, all of the PRC20s now will start having charts. We'll start having, and the market's going to decide what everything is worth. So this is going to be pretty revolutionary in crypto, because the other layer ones that have launched, they didn't launch with a full system state copy. They launched empty. And then they had, hey, come develop on us, come develop projects, come launch your project that you have on Binance or on Ethereum, come and launch that on this, and start from scratch there.
Mm-hmm.
All projects, smart contracts that work on Ethereum automatically work on PulseChain, automatically, right? All the founders have to do is go in there and point, they'll have to do is go in there and point their UI and to the PulseChain RPC now.
So this might lead into one of the questions. I was going to say, what would be a good use case? So basically, people who currently have projects built on Ethereum, they could theoretically be like, oh shit, let me just take this over to PulseChain. It'll become more attractive because for all the
you'll leave it on
users,
Ethereum. It can stay on Ethereum too. You're going to have a copy of every smart contract is copied over to PulseChain already, right? They can just go in there and they can just basically have to change their front end to say, which network do you want to be on now? You can switch between them. Simple as that. Yeah, they're just going to point it to, they just have to point it to PulseChain as well. So now they have basically 2 smart contracts, the founders and developers. And there's thousands of projects that are ready for PulseChain already. They're developed on testnet. They've been running it, and they're ready to, once mainnet goes live, they'll be able to start. They've already got their UIs ready to go.
Okay. And in your opinion, why are they eager to go there? Because they realize the fees and all that stuff are going to be less, and it's going to be something like Hex that already has proven that uptime is there and it's always there, very reliable. Is that the rationale?
Yeah, there's a lot of projects that were crippled by the Ethereum fees the last bull run. Okay, a lot of them have become stagnant. Okay, because operating at that level of fees was too expensive. So this is going to breathe new life into a lot of existing projects. Think about when a founder was looking to airdrop tokens to everybody. What that cost in Ethereum. I've heard of founders and developers that were spending over 6 figures USD, over $100,000 in Ethereum fees just to airdrop tokens to their community. Okay, I mean, just ridiculous stuff. Now they'll be able to do all of that same sort of thing on PulseChain for fractions of a penny.
So correct me if I'm wrong, Paul. So let's assume I'm a DEX, and right now my DEX is running on the Ethereum blockchain. I fear that in the next bull run, because I know that Ethereum already has shown signs of congestion, I realize that if people are using my DEX and I'm only built on Ethereum blockchain right now, I know that sometime in the future, all my users are going to be like, screw this shit. I don't want to use this. The fees are just too much. So that's, as such, in that scenario, if I'm the developer of that DEX, I'd be like, you know what? Screw it. My DEX works. It's great. All I have to do is just change a few little things here and there, user interface, all that, and move it over to the PulseChain. And now all of a sudden I can attract all those same people who were using my DEX before, who kind of got fed up of all the fees, but now they can do all the same things, and now they can do it faster, more reliable, and way cheaper. Yeah. Is that kind of the thought pattern?
I wouldn't say more reliable, because it's basically going to be the same code. So it's going to be that you're going to have the same reliability that Ethereum has shown, proven.
Okay. All right, fair enough.
Definitely cheaper and faster. Right. Absolutely. I mean, look at Polygon. Polygon's a layer 2 of Ethereum.
Hmm.
Look what Polygon. Look at the Matic token, and look what Polygon has done in a short period of time. Well, a lot of people just escaped the Ethereum fees and went to Polygon,
Yeah,
right?
yeah.
You can bridge there back and forth, but everything that worked on Ethereum was able to work on Polygon as well. Now, if Polygon's a layer 2 though, so if Ethereum has a problem, Polygon is gone because it's built on top of it. So PulseChain is going to be its own layer 1. So if for some reason Ethereum dies or has
Hmm.
problems, it's not going to affect PulseChain. It's a fork. It's a hard fork of Ethereum, so they're not tied together at all.
Okay, nice.
But it's the same code. Essentially, it's the same code.
Okay. And now you mentioned this a little bit before, but I don't know if you can discuss it any further in details. One of the questions I did have, I think you touched upon it, was like, can you discuss any partnerships or collaborations the project has already formed or is planning to form? Is this what you were mentioning when you said there's a lot of projects already that are eager and ready to go onto PulseChain when it's up and running? Is that correct?
Yeah, but that's all community. So again, with PulseChain, just like Hex, with PulseChain, PulseX, there's no company. There's no, it's not an organization. It's DeFi.
Hmm.
Okay. There is no one central point. There is no, again, all of those things that we talked about. It's completely decentralized. So there is no partnerships being formed between two organizations. Everything that we are seeing in testnet is all from the community. Okay.
Hmm.
These are just people that have decided to build something. A lot of them are already launched on Ethereum because they wanted to get their, during these last 2 years, they built stuff on Ethereum and they're ready to go on PulseChain. There's a lot of projects that announced that said, hey, once PulseChain launches, and they're on testnet right now, you can go and use, and check them out. But they're ready to go as soon as PulseChain goes to mainnet, then they're going to launch theirs. So there's both. There's stuff that's sitting on Ethereum that's going to also be copied over, and they're going to be ready to do it on both chains. And there's some that are just literally waiting for PulseChain to launch so they can do that. That's all from the community, though. That's nothing that that Richard Hart, the founder, or any of the developers or anything have anything to do with, because it's all has to remain completely decentralized. Okay.
Hmm.
Nobody can, again, back to the Howie test, right? If people are investing in PulseChain because they think that Richard is going to because Richard needs to do this or that after it launches, right? I mean, you think
Hmm.
about it. What do normal crypto projects do? What does their staff do? What does their organization or company do? They say, hey, buy our token because we're going to be doing this. We're going to be rolling out this. We're going to be developing this partnership. We're going to be, coming out with this feature down the road. We're working on all of that stuff all the time. Well, those are going to be securities.
Hmm.
Okay. Because the SEC is going to look at that and say people are investing because they're looking to gain a profit from the work of others. Okay.
Correct.
That's just like a stock, right? Right now, we buy stock in a company because we believe that the management team, that the CEO, that the board of directors, that they are going to be doing certain things that's going to make the company more value, and that's going to make my stock price go up. Right?
Hmm.
That's a security, and there's nothing wrong with that, but that's how it works.
Hmm.
Richard Hart projects are not securities. Okay, they are all basically community based. They are all decentralized. So anything that you see being built outside of PulseChain or PulseX, Richard has nothing to do with. That's
Hmm.
all just the community. Okay, so that way, when you're investing in all these projects, these things aren't going to be looked at as securities. They're all just community driven and they're all decentralized. Not all of them. I mean, you're gonna see some garbage on PulseChain, just like Ethereum and all this stuff. You're gonna see people launch garbage and meme coins and all this stuff, and it's gonna be garbage, unfortunately. So obviously, do your own research, follow the principles of safely investing and crypto safety. Don't click on any of these links that you're going to be getting, because there's going to be all that garbage too that can't be controlled. But my
Yeah,
point
yeah.
is all of that stuff around partnerships and all that sort of stuff, that's all community driven.
And just to kind of circle back, this comes back to why you were saying it was so important when we started this conversation that when Richard finally releases this and mainnet, he's done. Like I'm done. No more developing, nothing, so on and so forth. Finished.
Done.
And that
Finished
and that
product.
kind of goes back to your Howie test of, late. Listen, I released this. It's out there in the community. People can use it. They can do whatever they want with it. If they invest in the token, it's got nothing to do with me. I don't get it. I'm not developing anymore. It's finished.
Correct. Yeah. I like to differentiate between projects and products. Okay. I would say a crypto project, the term project to me means something that's ongoing. Okay. A project means something that a team of people are going to be working on, looking to improve, develop. There's going to be changes. There's going to be partnerships like we talked about. That's a project. Okay. It's important to understand if you're investing in a crypto project, that's most likely a security. And that's not a problem. There's nothing wrong with investing in securities. Okay.
Yeah.
There's no, as an investor, that's not illegal behavior. Okay. I don't want people to say, oh, I can't invest in that because I believe that the team is going to be doing great things down the road. Great. You believe in that? Go for it. All right. I would call that's a project. A crypto product, I would say, is finished. It's complete. Okay. It's launched on the blockchain and that's it. Okay. There's no promises. There's no expectations of work by founders or developers to improve things. Look, here's the code, and that's what true DeFi is. It's just you and computer code. You interact with it at the level that you want, with no expectations other than you're interacting with computer code. Developers can't do anything. Founder can't do anything. It is what it is. Okay. I think that's true decentralization. Okay. Because nothing can be changed then. Now, be an exploit. There could be a problem with the code, right? It can't be changed. So is that good or bad? That's up for, that's for all, those of us that are investing to decide. So I look for projects that are, if they are no admin keys, if they are, no counterparty risk, immutable code. I look for ones that have been around for a while.
Yeah.
Right. I'm looking for that flawless uptime, 100% uptime for thousands of days, like Hex.
And this is why obviously PulseChain has gone through like 4 iterations of tests and stuff like that, because yes, you're right. I guess there could be bugs, but out of curiosity, have they been sharing with whoever, if since you might be privy to it, have they been sharing like what kind of bugs the first testnet had, or if there was any, or are they just kind of saying, hey, we're going to another one?
The community sniffs these out, it's that's what the public test nets, and the community finds these things. That's the whole point of it, is that all this testing. So you can go on right now, you can go to testnet v4, change the MetaMask settings. You can go in there and look at all of the stuff that you owned at the time that they, launched the last testnet. So a couple of weeks ago, whatever you owned on Ethereum a couple of weeks ago, you're going to find that right now on V4 testnet. You can go in there and start playing with. You can start liquidity providing. You go in there and look at some of these other projects that are that are up on testnet. It's basically just like what PulseChain is going to be like, but it's just sitting there so that you can start to play with it. And so the community has been doing stress testing, or for it's been almost years now, since testnets have been out.
But all that stuff that you can test right now, I guess those tokens have basically no value though right now. Is that correct?
Yeah. Yeah, it's like Rinkeby on Ethereum. There's a couple of test nets that, and you could even bridge from Ethereum Rinkeby, which is a Ethereum test net. You can even bridge, tokens over to PulseChain testnet right now. So yeah, everything is going to be zero value, but you're looking at functionality, because there's no liquidity.
Now, one of the questions that I did have, which I presume, I guess PulseChain has already kind of addressed it. Just like Ethereum runs into congestion issues and stuff like that, scalability issues, has PulseChain addressed any of this stuff? I guess not. My question is this. Did they have anything in place where, let's say if all of a sudden PulseChain gets really, common and very, people are loving it, will it be able to scale? Or is it going to be, since there's no admin keys and no one can go mess around with the code, we just have to presume that he's already built in the scalability far, far ahead? Is that the deal?
Yeah, the idea is that, with the faster block times, they can handle a lot more transactions than Ethereum. With the higher throughput, that it's going to be cheap for a long time. Now, is it going to be cheap forever? No. It's going to, it's going to be a good problem for everybody, those of us that are finding out about it now and they're investing in it now, because if PulseChain has the same problems as far as gas fees go and congestion that Ethereum does now, those PulseChain tokens are going to be worth a lot of money.
Mm-hmm.
I mean, you're on the ground floor of a layer one, but you're right. The code is going to be the code, right? So
Yeah.
what's going to happen? Let's say we get 10 years down the road and PulseChain has the same problems as Ethereum does now. What are we going to do? Fork it?
Correct. Yeah. Yeah. And I presume theoretically, let's say if it took Ethereum 5 years or 5 years to kind of run into congestion and gas fees going too much, knowing that already, the creator of PulseChain has probably thought about this ahead of time. Maybe it would take 15 years for him
Yeah.
to run into the same issue. Is that correct?
Well,
Possible?
yeah. I mean, trying to predict the future is obviously the hardest thing. We would expect that crypto adoption is going to continue to accelerate, especially as each bull run comes up. So I would say the congestion is going to be building. It's going to be building quickly, right? Now,
Yeah.
it's obviously going to be faster than Ethereum, so that's going to help control some of that congestion. But eventually, I would say that look at the Binance fees. Anybody's been around for a while, Binance used to be fractions of a penny to transact there. Now you're 30, 40 cents a transaction, right?
Mm-hmm.
After a couple of years. Polygon, it's newer than than Binance, and it's still in that couple of pennies a transaction, but 5 years down the road, probably going to be 30, 40, cents a transaction. When I was first staking my Hex in 2019, I was paying less than $1 to stake. Okay.
Yeah.
Now it's going to cost you 20, 30, 40 bucks to stake on Ethereum. Okay.
Mm-hmm.
It's going to happen, as crypto becomes more adopted worldwide, these blockchains are going to get congested. So I would say, what we're going to see when PulseChain launches is PulseChain 1.0. And look at all the improvements and all the forks that Ethereum has already done, essentially, to be able to stay viable. Well, PulseChain is probably going to do the same thing. All layer ones are going to have to do it eventually, as they become more and more congested.
Nice. Now, I know you probably talked about this already a little bit. Obviously, Richard Hart is this guy who is the creator of Hex and now PulseChain. Do you know anything about his expertise or experience prior to Hex? Was Hex his first foray into like the crypto world?
I believe so. He's a pretty controversial guy.
He is, man. He's quite flamboyant, and I've seen he wears some funky clothes and stuff like that. But whatever, that I like. I like personality, so that's not bad.
He's definitely Mr. Personality. So, all we know is what he shared over the years. He was a self-made millionaire in his 20s, basically retired multimillionaire in his 20s from businesses. He owned some stores, car stereo stores, and a bunch of different businesses that he was in. Millionaire in his 20s, got into crypto. I think he said he was mining Bitcoin back in the day, 50-cent blocks, I think it was. He was buying Bitcoin for as little as 50 cents and mining it for as little as 50 cents per Bitcoin. And his wealth, obviously, since then has skyrocketed.
Yeah.
And he saw, or, he believed there was a lot of problems with Bitcoin, and so he came out with Hex to compete. Essentially. Now, Hex, depending on the ranking study you look at, if you look at CoinGecko or CoinMarketCap, they've got it pegged at 201. Okay, they have them on the third page, even though the market cap puts it around the 9th or 10th largest market cap in all crypto. Okay.
Really?
Go look at Yahoo Finance. Go look at some of the other ranking sites, the ones that aren't as popular, and you'll find out where Hex actually sits. I think people are going to be pretty surprised. Here's the reason. You can't get Hex on a centralized exchange. You can't go to Coinbase. You can't go to Binance and get it, right? These guys, I don't want to, stir up, there's a little bit of controversy here. I think Hex is pretty gate kept when it comes to the large ranking sites. I mean, who owns CoinMarketCap?
I think I
Binance.
knew. Who is it?
Binance does. Yeah.
Yeah, there you go. Yeah. I think
Yeah,
I read
yeah.
that somewhere once.
Binance owns CoinMarketCap. And guess how much money Binance makes off of all the trading that Hex does?
None. Yeah. Now, just so I actually, when I ran into this little while, I did go and buy some just to test it out. I think I put like $100 or $200. I went and bought some Hex just to see. I guess I went to some site called gohex.com or something.
Yeah, that's the main staking UI.
Okay.
So you go there, you'll connect your wallet, and that's where you would go to stake. So you
Yeah.
probably bought them on Uniswap or another decentralized exchange. Probably swapped Ethereum or USDC or whatever for your Hex, right?
I think I might have done it through PancakeSwap if I'm not mistaken. I don't know.
It's not on Binance. It's not on the Binance Smart Chain.
Well, I mean, believe it or not, Ethereum is on. It's Ethereum chain is now on PancakeSwap too.
PancakeSwap does it on Ethereum. You can
Yeah,
switch
yeah.
to the
So
different
I
ones.
think it might have been. I'm not sure. It was a little while ago, but and again, I
Got
just
it.
because I kept hearing about this hex thing, and I thought, let me go test it out, see what it's about. I
Yeah. So
mean,
on PancakeSwap is now multi-chain, is what you're saying.
yes.
Yeah. Okay. Yep. Yep. So yeah, on PancakeSwap, but you probably used Ethereum or a stable coin to
I think so.
to
Yeah.
to convert to Hex. So that's where you acquire it, and then if you want to stake it, which I would highly recommend, then you go to go.hex.com. That's the main staking UI, and that's where you'll stake it. You'll pick the number of days that you'll want to stake it, and that's how you earn yield. Okay, I think it's averaging 38% APY when you stake your Hex.
Yeah, the UI was quite nice. It wasn't terrible. It
It's
was
it's it's not flashy. It does one
yeah, it
thing.
definitely wasn't flashy.
Simple. It does one thing, and that is allows you to stake. That's it.
Yeah, it wasn't terrible. Um, and then the other thing that I don't know, I put like again 200, $300 of Pulse X or something that you can also buy through PancakeSwap.
Um, no, it wasn't PulseX, at least not because that's not even launched yet. That's
Okay,
the bet.
not PulseX, and I apologize. I can tell you just now in 2 seconds, but I forgot what it was. But anyway, before that, I guess Paul, if people are in fact interested in this and like the thought of this layer one coming out and what Pulse chain has to offer them, what are some of the easiest ways someone can kind of get some exposure to it and maybe invest in it a little bit? What would you say is the best way to do it?
Well, if you're interested in getting involved in PulseChain, obviously you're going to have to wait till Mainnet launch. You can get in right now and go around on testnet. But I would kind of what we talked about earlier. I would prepare by holding a couple of the ERC20s. I think Hex is the best one to hold, in my opinion, because that's tied directly to this entire ecosystem of a layer one blockchain, a decentralized exchange with PulseX, and then Hex with the store of value. I would compare, and a lot of people would probably say you can't compare the two, but conceptually, I would compare PulseChain to Ethereum, PulseX to Uniswap, and then Hex to basically like Bitcoin as far as a store of value. Okay. You're not looking to get 100x in Bitcoin right now. You're not going to get, 10x is in Bitcoin, is going to be, there's a lot of people that think maybe Bitcoin will do 10x in the next bull run. I don't think it will be that good. But people are still going to hold it because it maintains, it's a good store of value. So I would compare that basically PulseChain, PulseX, and Hex to basically being those conceptually why you would want to be involved in Ethereum, and using Uniswap and buying and holding Bitcoin. I mean, imagine if you could take your Bitcoin, okay, that you own right now, and that you could stake it to earn more Bitcoin, but without having to give up your keys, but could do it in your own custodial wallet without having to give it to a third party. How powerful would that be?
Mm-hmm.
That's what Hex does.
Hmm.
allows you to control your own keys. You don't have to give it to somebody else to earn yield. Okay, you don't have to take the risk. And you control when the stakes start and stop. And you can even end the stake without minting the tokens, so you don't have a reportable event, by going to good accounting, and you can wait, and then you could maybe mint the tokens January 1st. Again, a lot of ways to manage your tax implications, in this realm. But to your question, I would prepare by getting your bags packed on the ERC20 side in preparation for the copies that you're going to be getting on PulseChain. And then once you get your copies, again, 24, 48 hours later, you're going to see you could do some ratio trading the first 24, 48 hours. You could get on the PulseX, and you could be trading what you have, what you got copied over for Pulse and PulseX tokens. But I would caution against that. I think people are going to get really wrecked, potentially doing ratio trading. We don't have a USD value for stuff, but you're going to be trading on a ratio basis. That could be bad. So I would recommend people, get your ERC20s ready, whether it's Hex or Link or even Shiba Inu. I think those are going to be a couple of the big ones that are going to have value pretty quickly on the PulseChain side, because they have very large, vibrant communities that are waiting for this, watching for this, and they're going to be bridging value over. They're going to want to be looking to, buy and stake and do all this stuff for a lot cheaper than they can now. And then once the value is over in what you own on the PRC20 side, on the PulseChain side, then you can use those to convert to PulseChain tokens, PulseX tokens, PHEX, right? The PulseChain version of Hex. That's what I think the play is for a lot of people once mainnet launches, which could be in the next couple of days, the next couple of weeks. I doubt it will take more than a month at this point, just based on what we're seeing, what we're hearing, what we're observing in GitLab. We're seeing the stress testing by the devs. They've been bombarding the test net with hundreds of thousands of transactions in a short period of time, just to see how the network responds, see what the gas fees do and things like that. And so all the stress testing has been going on. Did you know 2 days ago, there were over 360,000 transactions on PulseChain testnet v4 in 1 day. I mean, this is going to be a pretty big launch. I mean, Ethereum does about 1.2 million a day. Transactions. PulseChain testnet had a day that was already about almost a third of that. So it's going to be interesting. It's going to be interesting.
There you go. That's the coin. That's a token. Pulse Pad?
No relation.
Oh, no, no relation.
So somebody launched something trying to take advantage of all the hype around it, probably.
Shit. Okay. Well, I'm glad
it might be a member of the Hex or PulseChain community. I mean, there's a lot of developers in there that are developing their own projects. I'm not condemning it. I'm just saying it's not related to Richard Hart's projects or products.
Okay. Well, I'm glad. I think I only did $70. All right, that's good.
Hey, I hope it moons for you, buddy. I hope it moons for you.
Well, hopefully it does, man. Hopefully it does. Well, hey, man, that was extremely, extremely interesting. And hey, just so we can let the viewers know, I know I mentioned it before. I know you have your own Facebook group. Can you talk about what that is, why some people might be interested in kind of checking out your Facebook group as well? And when I put this up in my group, what I'll do is I'll probably put like a link to your group or something. And if people want to check out the group, please just let them know briefly what it's about, and we'll try and get this thing wrapped up.
Yeah, you bet. I appreciate that. So yeah, my group's all about crypto safety. So I've developed a training course, 40 module course that allows people to really just learn the basics of how to be safe online when it comes to crypto. Everything from software wallets, hardware wallets, your email, your cell phone, how you conduct yourself online. Really, just I think some really great tips and tricks, stuff that I wish I knew when I started, things that I learned along the way. So I put that together for folks. But my group's all about crypto safety. So if that's of interest to you, I mean, look, you can buy $70 worth of a token, right? That thing can go to that thing can do a 10,000x, right? I mean, look at this Peppy meme or whatever's going on right now. Let's say this thing, you know, whatever you buy goes to 100 grand or whatever worth. But you know what, man? If you're not have things set up safely, that could be gone at any time. You click on a link that's, you know, going to just drain your wallet. So you could make all the money you want in crypto, but if you're not safely setting things up with kind of a moat around your castle, what I call bulletproofing your crypto, then I'd say you're taking too much risk. I mean, look, crypto has enough volatility and enough insane stuff that goes on anyway. You know, don't open yourself up to additional attack vectors. So what I try to do is just to help people to understand what's a safe way to navigate crypto. That course doesn't go into anything specific. It's not like you should buy this. It's not an investing guide or anything like that. It says whatever you're doing, do it this way to stay safe. That's what my course is all about.
Nice. And just out of curiosity, Paul, how did you? I know I think you said this is based on a lot of stuff that you learned, or did you have some experience ahead of time where you kind of gained that knowledge?
Yeah, both. You know, stuff I've learned, observing others, hearing other stories. You know, I give a lot of the credit to Richard Hart, following him for years on YouTube. I mean, a lot of that stuff about staying safe online is stuff that I've learned through him, because he's always been big about, you know, hey, don't store your stuff on centralized exchanges. When I first got introduced to Richard Hart, I had all my Bitcoin sitting on Coinbase. You know, hey, if you guys notice, when Bitcoin is going up or down really fast, Coinbase freezes trades, freezes withdrawals sometimes, okay, to protect their books. I don't like that, okay?
True.
I didn't like that. You know, centralized exchanges have way too much power. I use a centralized exchange for one thing: on-ramping to crypto or off-ramping. That's it. I don't store my stuff there. I don't stake anything there. It's not my keys. Then it's not my crypto. So a lot of that stuff I've just learned along the way. And look, I've interacted with a false DEX before, accidentally lost crypto. Okay, so it's just, I tell people, you know, I've only been in like 4 years of crypto now. There's people that have been in a lot longer than me, obviously, but what I've learned in 4 years, I put into my work here. And so somebody that's new or thinks they've got it figured out but is concerned about safety, come and check it out. See if you can pick up some tips and tricks that's going to keep you safer online.
Awesome, man. Awesome. Well, man, I think we covered a lot of stuff. I know I had some questions, and I think you knocked them all out. So perfect, man.
If you want to learn more, go to PulseChain.com, go to PulseX.com, go to Hex.com. That you can go there and just read right from the horse's mouth what the stuff's all about. And then I would recommend going on Twitter and following Richard Hart on Twitter. Now, there's a lot of fake accounts out there. Make sure you do the right one. It's Richard Hart Win, I believe is his handle. He's got 300 and something thousand or maybe more by now followers, so you'll know that you have the right one. Because we don't really, you know, there's so much scams out there. There's so much garbage of people trying to take advantage of the hype or scam people out of stuff. Until he posts a link, you know, on his social media, I wouldn't trust it, you know, from any other source as far as his projects go. So that's where you can get the latest and greatest information, and follow him on YouTube. You can go and just look at some of his previous videos. There's thousands of hours of content there. He's an acquired taste, but I would submit that he's a genius. Okay, he's a genius when it comes to this stuff. I don't agree with everything he says. You know, there's a lot of stuff I disagree with outside of crypto, but I have never betted against Richard Hart, and it's paid me very well, and I don't recommend anybody bet against him either. That's my personal opinion.
Good, nice. All right, man. Well, that's a great way to end it. And again, man, thank you so much for taking your time. And you know, obviously, I look forward to interacting with you more in the groups. And you know, I definitely appreciate you taking the time, man.
You bet. Thanks for having me. Take care, everybody.
All right, man. I'll probably share this in the group, so you'll see it in there as well. All right.
All right,
man. Thanks, Paul.
Take care. Stay safe out there, guys.
All right, man. You too, man. Thank you.
You bet. Bye.